I own gold because I'm afraid it's going to go to 9,000
Mm.
or 10,000. The idea that people are concerning themselves about whether silver is 31 or 32 is laughable. It is absolutely, completely laughable. If I'm right about the primary direction of the the gold price, pardon me, at some point in time, silver is going to break out.
Yeah.
Silver hasn't moved, and people say, why when gold has moved? Because until the last 4 weeks, central banks haven't bought any silver. The people who've bought gold have not bought silver. That's why gold has moved and silver hasn't moved. This is really simple stuff.
The gold market has seen exceptional growth throughout 2024, with prices reaching record-breaking levels. The rally began in early March, pushing gold to $2,160 per ounce, an 8% increase from its previous high in December 2023. This momentum has persisted, with prices approaching $2,800 per ounce and speculation that they could soon hit $2,900 or even $3,000. However, author and financial expert Rick Rule suggests that if global financial conditions worsen, gold could rise to as much as $9,000 to $10,000. Gold's performance in 2024 draws comparisons to previous market cycles. One notable surge occurred in the 1970s when gold jumped from $35 to $850 per ounce after the U.S. eliminated price controls and moved off the gold standard. However, Rule argues that the 2000 to 2010 rally offers a more relevant parallel, as gold rose from around $250 to nearly $1,800 during that decade. This earlier rally was fueled by economic instability, growing distrust in fiat currencies, and heightened demand for safe haven assets. Today, with central banks pursuing aggressive monetary policies, similar risks are emerging, prompting investors to view gold as an opportunity for returns and a shield against potential financial disruptions. While gold has dominated attention in 2024, silver is also beginning to gain momentum. A rally emerged at the start of the second quarter, initially lagging behind gold's performance, but showing significant strength in recent weeks. Silver prices have reached a 12-year high, indicating that the metal is catching up with gold's bullish trend. Historically, silver tends to trail gold in the early stages of a bull market, but often accelerates later as market sentiment shifts from caution to speculation. Rule highlights that silver's gains have been dramatic in previous cycles, with surges from $1.50 to $50 in the 1970s and from $4 to $25 in the 1980s on Doxenlar. During the early 2000s, silver again followed this pattern, rising from low single digits to nearly $50, showcasing its potential for rapid growth once momentum builds. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
I think I said on your show 7 or 8 months ago, I don't own gold because I think it might go through
Mm.
2,500 or 2,700.
Yeah.
I don't own gold as a speculative asset class. I own junior gold shares as a speculative asset class, but I own gold because I'm afraid it's going to go to 9,000
Mm.
or 10,000.
Yeah.
You don't have to go all the way back to the 1970s, where, of course, gold was coming off price suppression. It had been controlled prior to 1970. In the 1970s, gold ran from 35 bucks to what, 850, something like
Yeah.
that?
Yeah.
A better analog for today, because there's no price control today, a better analog would be the period 2000 to 2010, where the gold price went from $250 an ounce to $1,800, $1,700 an ounce. That's not a bad move, a sevenfold move in 10 years. So when people tell me that I am afraid that gold is going to go from 2,500 to 9,000, when I tell them I'm afraid it's going to have a threefold move, when I look back in history,
That's conservative.
that estimate's fairly calm.
Mm. Mm.
I'm not saying it is going to go to 9,000. I'm saying that I own it because I'm afraid it's going to go to 9,000. Now we've begun to establish real price momentum in gold. And price momentum in gold has traditionally been the leading indicator of a change in sentiment around silver. Whether it occurs now or it occurs a year from now, actually at 71 years of age doesn't matter very much to me, because silver bull markets are so profound that you can be a year early or 2 years early. And the amount of money that you make if you experience a silver bull market is so astonishing that the fact that you were a year or 2 years early doesn't matter. People say to me, Rick, how will I know that I'm in a silver bull market? And I ask them to look at charts of prior silver bull markets.
Okay.
You don't need to look for subtle symbols.
Like hockey stick.
Seminole bull market, the 1970s, the stuff went from $1.50 to $50. So
That's right.
let's get that one out of the way. Let's go to one in the early 1990s that people don't remember at all. 1990 to 1996. The stuff went, if my memory serves me correctly, from $4 to $25, a five-fold move in the silver price.
Okay.
That's for a bull market that people don't remember.
Yeah.
In the 2000 market, if I recall, silver had settled back down into middle single digits. I forget what the number was. Let's call it 5 just for fun. It's probably 10. I don't know. But it went from there to 50. The idea that people are concerning themselves about whether silver is 31 or 32 is laughable. It is absolutely, completely laughable. If I'm right about the primary direction of the gold price, at some point in time, silver is going to break out. Silver hasn't moved, and people say, why when gold has moved? Because until the last 4 weeks, central banks haven't bought any silver. The people who've bought gold have not bought silver. That's why gold has moved and silver hasn't moved. This is really simple stuff. Truly, truly, truly simple stuff. The Russian central bank has suggested that they are or will be buying silver. Apparently, the Indian central bank is reputed to have said the same thing very, very recently. This is a highly speculative activity if they choose to engage in it, and it might be that they aren't. It might be that those reports are fallacious. I would simply note to you that the reason that gold has outpaced silver is, first of all, because it always does in a bull market, but second of all, because the primary buyer of gold has been the central banks, and they aren't normally a buyer of silver. If, past its prologue, at some point in time in this gold bull market, leadership will pass to silver, and it will not be subtle based on past markets.
Central banks have maintained a steady pace of gold accumulation, reporting net purchases of 8 tons in August. Although overall demand has decreased from the early highs of 2024, the accumulation of gold reserves continues to be positive, particularly among emerging market (EM) central banks. The net purchases recorded in August were the lowest since March, when central banks reported a net sale of 2 tons, and were also significantly below the 12-month average of 33 tons. This trend underscores a notable divergence between the activities of central banks and retail investors, as central banks focus on acquiring physical gold rather than gold shares. This distinction has led to a situation where the price of gold rises without a corresponding increase in gold shares. For investors concerned about rising gold prices and feeling they may have missed their opportunity, Rule asserts it is essential to contextualize gold within the broader investment landscape, particularly against the backdrop of the U.S. 10-year Treasury bond. With the Treasury yielding approximately 4%, inflation diminishes the real rate of return, erodes purchasing power at an even higher rate, and gold emerges as an attractive alternative for those seeking to protect their wealth.
I think your last question is fairly easy to explain. Until about, 16 weeks ago, as measured by outflows and inflows from the ETFs, the retail buyer wasn't in the gold market. It was the foreign central banks that drove the price up. And central banks don't buy gold shares. They buy gold. So the fact that an asset class went up, but a related asset class didn't go up, is explained away by the fact that the buyers that drove the one asset class up, physical gold, don't buy gold shares. I think, by the way, that the gold market has particular legs because I still don't see aggressive retail physical buying, either through the physical ETFs like GLD or products like the Perth Mint or the Sprott Physical Gold Trust. And I'm hearing from the dealers that although physical demand is strong, it isn't overwhelming, which is to say that the gold price itself, the bullion price, is still mostly the province of central banks. I continue to believe that the momentum that we've seen in the gold price, as well as concern about the ongoing purchasing power of people's savings in fiat currencies like the US dollar, means that we will get an overlay of retail buying. When we get an overlay of retail buying, I would suggest that it's going to come up on top of the foundation of central bank buying, which is a different way of saying perhaps, I'm not saying for certain, but perhaps in American parlance, you ain't seen nothing yet, because I'm not seeing broad spread public participation in the gold market, physical gold market. One thing that's changed in this country, and I think it's interesting, is that the nation's third largest retailer, Walmart, or not Walmart, pardon me, Costco,
Oh, Costco.
has begun to sell retail gold.
Hmm.
And they literally can't keep it in stock. Their response, I guess, to a different audience than the traditional gold buyer, has been very dramatic. Dramatic enough that they're going to start selling platinum or palladium products as bullion in Costco too. In that one example, we've begun to see retail participation. But when I look for retail participation in the ETFs, or I look for retail participation in the Sprott Physical Trust, where I have data, what I'm seeing is a gold bull market that still is being led by central banks, not by living, breathing people. My viewpoint, the anti-gold, is the U.S. 10-year Treasury.
Okay.
I realize that's a very American-centric point of view, but the U.S. Treasury has for years been the benchmark savings instrument in the world. It's the interest rate that other yield products, foreign and domestic, are priced against. So let's talk about gold against its primary competitor, the U.S. 10-year Treasury. The U.S. 10-year Treasury at present pays about 4% interest in a currency that I would argue is losing its purchasing power at about 7.5%, that the U.S. dollar is losing its purchasing power at 2.6% a year. But the CPI doesn't include a few things that most people spend money on. As an example, the CPI doesn't include tax. Now, Carrie, I wouldn't complain quite so much about the index if I didn't have to pay the tax. But the truth is I do. And I think that when Americans, at least, look at the CPI and they look at the suggestion that that number is increasing at 2.6% compounded, and then they look at the price of gasoline over 4 years, or the price of food over 4 years, or the price of health insurance over 4 years, or the price of mortgage interest rates, or the price of rent, this 2.6% escalator is stupid. It's absolutely silly. So let's go back to the U.S. 10-year. They pay you 4% in a currency where your purchasing power is declining by 7.5%, which means that the U.S. 10-year Treasury costs you 3.5% of your purchasing power every year for 10 years. If you give your money to the U.S. government, they will give you back 60% of your original purchasing power over 10 years. That's what gold's competing with. Now, that's a hell of a deal.
Many analysts and investors are optimistic about the performance of gold and silver, citing the declining strength of fiat currencies and the role of these precious metals as reliable stores of value. Peter Schiff's prediction that gold could rise 20 to 50 times its current price may seem extreme. Even in the most favorable scenarios, reaching a price of $10,000 would require unprecedented conditions. Silver also presents notable upside potential, as evidenced by a significant bull flag pattern that has emerged since the 2020 lows. A sustained breakout in early March has led to accelerated gains, and if this pattern continues, it suggests a target price of approximately $41.70 for silver. Please share your thoughts on Rick's analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.